Hello traders, Gary Wagner here. Approximately 10:45 in Honolulu, making it 4:45 in New York. It is Tuesday, the 9th day of September 2012, and this is the daily report for gold and silver. We do have lower prices showing today in both gold and silver, although silver is really holding its own. We'll talk about that in a little bit. But as you can see, current print on the board, roughly 1664, puts it down about $11 on the day. It's had a low of 1759.50 and a high of 1780.50. Silver, as you can see, currently trading at 33.91. That puts it off about 10-15 cents on the day. The low has been 33.44 and the high 34.30 on the day. Now, I actually think that we're in a pretty critical area right now in gold in terms of an absolute must to find support here, because if it doesn't, I feel it might go to the next level. And I really want to use this chart to show you on a technical basis what I am looking at. And the first thing I want to do is, now that it's blown up, I actually want to go ahead and line to the tops as best I can so that you can see what it is I am looking at. 360-minute chart, straight candlestick format. We're going to go ahead and compress this chart so we can look at some other areas. There we go. And you're going to see something that I think is absolutely noteworthy. Now, as this market came up, you see this is our Fibonacci retracement, and here, this to me is a critical area right here. But the market is trading, as you can see, I've put this horizontal line in so that you get a real good idea of where the market really has traded to. And here's what you're going to note when we darken that line in so we can follow it across. 1663, 1664, that's the area. Now, in terms of a historical reference, and this, of course, is 1800 here, there can be no doubt. When we take a look at this market, you can see this really strong double top right in here, and this making it really a triple top. So now we've had this triple bottom, 1, 2, and this really protracted bottom right in here, but it is a triple bottom right there. But now when we take a look at it, when the market came down, let me go ahead and pull my arrow up, but when the marketplace came down, it found support and then found support here and then traded up to a resistance area, the resistance area being right here. It then went down, hit this secondary low, in other words, it tested that twice, and when it went back up, take a look at the first real level of resistance. So you've got a real strong resistance level. And remember, resistance and support are the same as saying the floor and the ceiling. It really depends on which side you're on. In other words, if you're on the second floor looking down, that of course is the floor. If you're on the first floor looking up, it's the ceiling, but it's the same structure. Why do I say that? Because this area here could absolutely be supportive and should be supportive of gold pricing right in here. If it is not, the next real level of support doesn't really come in till about 1740, actually 1738 and change, and that is this particular point right in here, as you can see. So, is it an important area? I think it is. Now, you can see points in which it kind of traded in and out. Let me go ahead, now that we fixed and we understand where I've put this line from, I can go ahead and really uncompress this chart so we can take a look at this in a little bit more detail. But you can see that when this market was trading back in the beginning of September, it was truly trading all around this particular area. In other words, this area wasn't really showing us resistance or support because it was trading above and below it pretty hardcore. You can see right in here, it does act as a supportive measure. You can see right in here, it's a little bit too early to tell, but it should act as a supportive measure. So the question becomes, what do? We do have positions in silver, tons of profit in that. We have pulled major profits in gold, but our current position is at 77, so we're under the water by about almost $15, about $13 on the trade. I don't really want to let it, even though we have stops at 35, my traders who have been with me for a long time know that if I see a trade and I don't believe that trade's working, I'll just go and pull the plug. We'll take a small loss, look to reposition ourselves at a later point. Are we at that point? Well, I can't say that we are. We certainly have had more pressure than I thought we might have. And the fact of the matter is that 1800, which is an area that I pointed out time and time again as having potential resistance, it couldn't make it through there. There's no doubt about that in either case. However, I do believe that we really want to see how it reacts here, because if in fact it cannot hold this area, my fear is that it will come down to test this major support level, which, as I said, sits at around 1738. Now, the other thing that I really want to be careful about is when we consider how far this market has moved and moved off of these lows into here, and now when we consider the fact that this market truly is exhibiting the potential for a top, meaning we've had these series of dojis, two dojis, now we're getting some lower days, so that candle's turning red. In terms of a straight candlestick pattern, it is developing not a consolidation, because a consolidation would be simply small body candles and then a flip up. But if this begins to turn red and get larger, then it's significant of a potential top. If that's the case, what do we think's happening? First of all, long term, I'm still looking at the same thing. In other words, we've gotten our conclusion. There's one. We're getting two now. We'll get wave 3. We'll get wave 4, and then we'll get wave 5, taking us to new highs. So my big picture has not changed, not whatsoever. At the same time, we have to recognize that this will be a series of waves, and the market will, in most cases, unless it goes straight parabolic like it did right here, which is unusual, we're going to get some sort of a top, and it does seem to be a logical point, quite honestly. We'll get some sort of a retracement. We'll talk about that tomorrow, as well as Thursday. In other words, if the market continues under pressure, we'll plot the different areas we think that it can go to, and based upon those, we'll make a position whether we want to hold an ad or just simply offset and forget this, take it off the book, so to speak, and look for another trade. More to come, more to follow on gold. Let's take a look at silver. Now, silver's actually been pretty dynamic. The one thing that we can say is where gold was consolidating in one fashion, we saw this major consolidation happening in silver. We have had a testing right in here, and that, I believe, is going to be absolute support, and that is at 33.25. That's why our stop is just below there. My sentiment is we've taken two stabs at it. However, it does seem to be following gold on one hand. On the other hand, today it's a little bit more resilient. In other words, where we see gold off, we don't have silver off nearly as much. Of course, there is strength in the US dollar right now. There is a lot going on in the European Union with Merkel meeting over in Greece. Apparently, there's 7,000 military as well as policemen making sure that there's no riots or anything. So that's a scenario that we want to watch very, very closely, because what we have been seeing lately is during times of real uncertainty in the European Union, it is a flock to the dollar being safe haven, rather than a flock to the gold or a move to gold being safe haven, which is a dynamic shift that we noticed a while ago, but seems to be still playing out. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow on Wednesday for another daily update and review. Bye-bye.